Just made some money in the stock market. What's up, my friends? Today, I'm gonna be talking about the stock market. I'm gonna be talking about real estate. I'm gonna be talking about REITs. And you know what? You're hitting me up with the question over and over and over again, which makes more money? And today, I'm giving you the answer.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
Welcome to the Money Channel. This is where people subscribe that want to master the game of money and all the different ways of making money. Today we're talking about the stock market, we're talking about real estate, and we're doing a comparison because I get comments all the time on my channel. Kris, which one makes more money? Is it the stock market? Is it real estate? Today we're actually going to talk about which one makes better money. Let's talk about the stock market and what it is first off. The stock market is where investors connect to buy and sell investments, most commonly stocks, which are shares of ownership in publicly traded companies. For example, right now in the United States, there are roughly 9,500 companies that are publicly traded. You could go on the NASDAQ, the New York Stock Exchange, and you could basically buy a part of these companies. For example, you're probably familiar with Apple, Amazon, Walmart. These are huge companies. And I'll even go one step further. If you've heard of the S&P 500, that is a collection and aggregation of the top 500 publicly traded companies. So when I say stocks, that's what I'm talking about. On the other hand, you've got the game of real estate. And real estate is the property, land, buildings, the air above the land, the underground rights below the land. And that term real estate means real or physical property. So for example, someone that buys and sells homes for a living. It could be someone that buys a home and rents it out. It's the commercial buildings where we go to watch movies or where business operates. All of that is the game of real estate. And you know what Mark Twain said? They're not making any more of it. In fact, right now, there's no new real estate to find on the planet unless you invent it by taking landfill garbage and then putting it in the water and building something on top of it, which actually some people do.
An island floating on plastic bottles is the coolest thing I ever made.
You know, something that fascinated me right from the beginning when I was learning about the stock market and real estate was that one of these two investments would allow you to literally get 5 times more leverage than the other. And at the end of this video, I'm going to share with you which. So let's jam on the comparison of stocks versus real estate. From Investopedia, some of the key takeaways is the decision to invest in real estate or stocks, it's a personal choice that depends on your financial situation, risk to tolerance, goals, and investment style. They go on further to say that real estate and stocks have different risks and opportunities. Truly, we are comparing apples and oranges.
Hey, Apple, hey.
But my goal during this video is to make it so clear and obvious how they are different and similar from each other that you can make better financial investment choices. Now listen, I became financially free at the age of 26, super young because of my investments. And for you to really understand the comparison between the stock market and real estate, you need to know that today we're technically not talking about real estate in general. We're talking about 2 types of real estate. One kind functions very much like the stock market. It's called a REIT. And the other kind is when you actually personally go out and buy and own real estate that you 100% control. So if we're going to compare real estate to the stock market, I want to start by doing a comparison with REITs, which stands for Real Estate Investment Trust. It's basically a company that aggregates a whole bunch of people's money so they can go out and buy real estate. Here's a graphic to help you sum it up. In a REIT, you've got a whole bunch of investors. They throw some money into this company, and the company then goes and buys a lot of this real estate that is designed to be held and pay money. Like if I buy an apartment complex, the renters, a whole bunch of them have to pay rent. That can produce profits. Now, different than the stock market, these profits will actually get dispersed to the investors as dividends. So they get paid for their investment along the way. I could almost use the same graphic to explain how stocks work, except there's one major difference. You see, in the stock market, a bunch of people come together and they give money to a company. Let's call it Apple, and Apple's gonna create Apple Watches and sell Apple Music and all that stuff. Well, after they do their thing, it produces profits. But you see, when you buy a part of a company, they're not actually going to give dividends to you for actually owning the company. There's a different reason why you buy stocks in a company. It's because I can buy the stock today, hope that it goes up in value as the company succeeds, and I can liquidate at any time and take my gains. I don't have dividends along the way, but I do have the growth. So now let's compare these REITs to the stock market. I gotta start by telling you that's a really hard thing to do because they're so different from each other.
So many differences, this is gonna be hard.
But if we were gonna compare REITs in the stock market, here's a graph that helps you understand the returns or the growth or how money is made. The purple line right here represents the S&P 500. So remember, it's the top 500 most successful publicly traded companies. This orange line right here represents Vanguard's real estate ETF. That's their REIT. And you'll notice that over time, these perform actually really similar to each other. I want you to get this takeaway. When you invest in a REIT, you're going to get returns that are actually really similar to the stock market, but you are going to get those dividends on top. The real question is, am I a fan of REITs? Should you be a fan of REITs? Not so fast. You have to understand the risks when you're investing in real estate versus the stock market. And I'm gonna go deeper into this, but ultimately real estate, there's a ton of research required. There's a lot of upfront capital required. It's not super liquid. There's additional costs to owning and operating real estate. You've got tenants to deal with. You have housing bubbles and crises. Stock market though, it has its own bag of cats. It's got volatility, economic cycles that go up and down, policies and regulations. You've got the good investments, but you certainly have the poor investments from failing companies. You have to deal with the low ROI, and diversification is a huge problem. If you want to invest in the stock market or real estate, you need to understand this stuff. So literally in the next 2 minutes, I'm going to give you everything that you need to know about the pros and cons of the stock market. Check it out. When you invest in the stock market, you need to understand that one of the benefits is highly liquid. That means I can put my money in today and tomorrow I can request it back out. The good news there is that if you need money in a pinch, you know that you can move it in and out kind of similar to like a bank. Now, it's also easy to diversify. Like you can find companies that you're a fan of and you can buy just that company's stock. Or you could purchase a piece of the S&P 500 and say, I want to own a little bit of the top 500 companies. In other words, you have some choices with which companies you buy. You also have low transaction fees. You know, when you buy real estate, you got to pay a realtor's commission that can be like $5,000 or $15,000. When you're buying stocks, these are really, really tiny fees to be able to get in and out of the market. And lastly, it's pretty easy to add the stock market investments to tax-advantaged retirement accounts, IRAs, 401ks. So there's a benefit for some people to say, hey, I'm already investing in retirement anyway, and this jives really well with making stock market investments. However, there are some huge disadvantages to the stock market that a lot of people really aren't aware of. Right now, there's a lot of volatility, right? Like when the economy shifts, when the market is doing well, it means that it can also do bad. And it means for most people, they can't do short-term investing with the stock market. You have to play it long-term so you can ride out all of these ups and downs. I mean, imagine what would happen if you bought in when it was high and then there was some crazy news or an election year or some crazy pandemic. The market drops and you make a rash, dumb decision to pull your money out. You've just lost a whole ton of money.
Where's the money?
On top of that, there are no tax shelters in the game of the stock market. If you make money and things go up and you pull it out, you're producing what is called a capital gain. In other words, your money increased in value and you've got to pay big taxes on that. You also need to be aware that there's sideways movements. Dude, sometimes the stock market chills for a couple of years right here. It goes up, goes down, it chills and it moves sideways. You're not getting gains when that happens. And then this was my problem when I did day trading, the emotion of driving the investment, especially with day trading. I couldn't hack it, man. I was frazzled. I was losing it. I'd lose 30% of my money and I'm like, hurry, do a trade and make 50% back. And then I would lose again and Man, at one point I had lost $20,000. That was back when I was young and I had very, very little money. And I'm like, wow, this is not an easy game for a very emotional person. Now let's talk about the advantages, pros, but also the cons of investing in the game of real estate. By the way, I have moved 4,500 different properties as an investor over the last decade. I know what I'm talking about. I'm a pro talking about the pros. Number one, passive income, baby. That means that my investment has leftover money every month that it makes for me, but guess how much work I gotta do to receive that cash? Nothing. Next, tax advantages. Different than the stock market, real estate is, next to business, the number one place where you shelter money, or in other words, where you put money, where the government, Uncle Sam, is gonna give you maximum tax benefits. Real estate is a great hedge against inflation. That means that when the dollar becomes less valuable year after year after year, real estate hedges that by actually appreciating and increasing in value. And real estate over the last 80 years has appreciated more each year on average than inflation, which means that if you own real estate, it's a great store of value. It's a great place to keep money and know that year over year over year, you're gonna win, compared to the stock market where some years you win and some decades you lose. But hands down, my favorite pro of all time in the game of real estate is what's called leverage. This, my friend, is what leverage is. This is $100,000 of cash. It's 10 stacks of 10 grand. And here's the question: how much stock can I buy with $100,000? I can buy $100,000 of stocks. But in real estate, $100,000 purchases on average $500,000 of real estate. Now think about what that means for a minute. I put in $1, but I get 5 times the purchase power. When real estate appreciates in value, do you know what that does to my original investment? It multiplies it by 5, which means that real estate has a chance to produce dope gains. I'm talking about make a lot of money. I mean, there is a reason why I became financially free and initially retired at the age of 26. All I did was buy 25 homes. They produced over $10,000 a month. But my original little $5,000 investment, I grew it into $1.6 million just because of this one benefit alone called leverage. Whoa, Kris, hold the phone. You're telling me that my money goes 5 times further in real estate than the stock market? You better explain that. Check it out. I got $50,000 right here. And if I wanted to buy a piece of real estate that I wasn't gonna live in, right? Like an investment property, maybe imagine a single family resident home that I wanted to buy and rent out and get some of that passive income, right? That positive cash flow. Let's say the bank says, okay, Kris, if you bring $50,000 to the table, we will lend the other $200,000 on a $250,000 house. Again, $50,000 is buying 5 times its value in the form of real estate. But in the stock market, it doesn't work that way, because when I buy a share of stock, I'm buying 100% of that share. I own it outright. I own all of it. In real estate, the only way to own it outright is if you start buying homes cash.
That's stupid.
And most people can't do that. But it's not all cupcakes and rainbows when it comes to real estate. There are some disadvantages. For example, compared to buying stocks, there's more work that you have to put into owning a piece of property. You might have to talk to a realtor and then go look at a bunch of homes, and you got to go to the bank and you got to set the loan up. And guess what? All of that takes time that you just don't have when you're buying in the stock market. Also, real estate can be expensive and illiquid. First of all, expensive because, like, what happens if a renter doesn't pay their rent? Guess who has to pay that now? You do. Or if there's a repair that takes place. In other words, there could be some additional out-of-pocket expenses that come with this type of investment. And illiquid means, well, shoot, I just had an emergency. I need to sell my house and get my money out of it that I put in. Well, guess what? You can't put it on the market tomorrow, find a buyer, and close it tomorrow. It can be a multi-month process. Different than the stock market, you've got high transaction costs when you actually buy real estate. Listen, you got to pay an appraiser to go out and create a valuation on the property. That can cost you $400, $500, $800. You're going to pay someone to inspect the property. You have your closing costs. You're going to have someone pay the realtor. You're going to do the title work. I mean, in general, you can have 2, 3, 4, or 5% of the total purchase price add up in additional fees when it comes to buying the property. And lastly, appreciation is never guaranteed. Even though since 1963, the market goes up more than 4.5% year over year over year, that's an average. You could have years where the market goes down or stays down, very much like the stock market. But I must say that in comparison to the stock market is super volatile, right? In comparison to real estate, which is slow and steady. By the way, you do know the story of the tortoise in the hare. Everyone's heard that one. The hare starts the race, leaps forward. It's so fast, guesses that it has time before it crosses the finish line and decides to take a nap. Tortoise, on the other hand, just keeps on going, keeps on chugging. And by the time the hare wakes up, the tortoise has won the race. I guess another way to say that is that stocks are about timing and real estate is about time. Now listen, we've been talking about REITs. We've been talking about the stock market, but you know what? There is another kind of real estate that I'm going to take just a couple more minutes on because I want to show what it looks like when you actually own real estate 100% yourself versus owning a part of a REIT that a whole bunch of other people own that you have no control over. Listen, my subscribers to this channel know that I built all this wealth when I was a college kid. And it wasn't buying REITs, and it certainly wasn't doing the stock market. All I was really doing, frankly, was losing money day trading. No, I was doing something different in real estate called purchasing personal property, like property that I owned in my own name. Let me give you an example of what that looks like. Personal ownership basically means you use your credit or someone else's and get a loan from the bank and buy a property. You're the one providing a down payment. You're going to control the property. You're going to manage that property or have someone else do it. You're going to sell the property, and then 100% of the profits or losses are yours. And what this type of real estate does is it opens up the door for making way more money than REITs and a lot more money than the stock market. The real comparison I want to do at the end of this video that can put a lot of money in your pocket over time is comparing REITs to personally owned real estate. For example, let's look at the pros and benefits. With REITs, the benefit is it's very little time. You're not talking to tenants and you're not going to Home Depot to fix crap. You own a piece of a lot of real estate, and that produces safety in numbers, meaning if there's 1,000 properties in this REIT and one of them is a bad egg,
and really bad eggs,
guess what? All the rest of the properties lift the rest of the tide. You can afford to have a couple of bad eggs. And it requires potentially a lot less money. Like I could put in a ton of money, but I could also potentially put in a lot less money than I might even need to buy a simple property that I'm going to own in my own name. On the other hand, look at the benefits of personal ownership. And if you want to know why I'm such a big fan, and it's because of how much money you can make, check this out. When I buy the property, I control it. It's mine. Those decisions are for me to make. Number two, I get 100% of the profits. I'm not getting a little piece of something like spun off of the stock market or a REIT. I own the property. I get all those benefits and tax benefits. They are huge. They're massive. And 100% of those also flow to me. But there are some disadvantages when you compare them to each other. For example, REITs. You do forfeit the control. Like you can't say, hey, I bought a sliver of this whole company and I want to weigh in on some of the decisions that you're going to make with these properties. I want to meet with the board of directors. That ain't going to happen, which ultimately equals this, making less money. For me, my friend, that doesn't work. But with personally owned real estate, you don't just own 100% of the profits. You also own 100% of the liabilities. Like if you make a mistake or if you do it wrong, man, you can lose the farm. So you better be making the right bet. And lastly, with personal purchases, someone's got to come up with the down payment, whether it's you, a partner, or somebody else. That's a large chunk of change per property. If it's a primary residence, like a home I'm going to live in, it only might be $5,000 or $10,000. But if I'm buying like a $250,000 home for someone else to live in, I might have to bring $50,000 to the table. Out of everything we've talked about today, hands down, I'm placing my vote on personal ownership. I want to own that real estate. But you've got to be aware that there's a hybrid option. Through partnering with other people or with private funds, there are ways for you to maintain control, have 100% ownership, and you split the resources. Someone else could put in the time, someone else could put in the money. And my friend, this is my favorite way of investing in real estate. If you're watching this video thinking, okay, Kris, this has created great clarity for me, but how do I make the most money in real estate? Click the link below and learn about becoming my partner. Learn about partnering with me in the hottest markets with my team of experts. They're putting in 340 hours of work per property, and there's 200 of them. So collectively, we earn the highest gains in real estate. I'm not talking about stock market 6%, 7%. I'm not talking about small dividends. I'm talking about buying real estate and earning 25% ROIs and up. And if you want to learn how to do that, click the link below and get some more information on that. I'm blown away that $5,000 was all it took to literally create millions of dollars. And if you really don't know how to do that and you're not a subscriber, fix that right now. Subscribe to this channel because I'm here to help get the financial genius within you to awaken and start making the kind of financial choices that can unlock doors of possibility in your life. Furthermore, if you like today's video, smash that like button. And if you want to learn more right now about what it looked like for Ryan and his wife to partner with me and buy 5 properties in 5 months, it's amazing what they experienced. Click here, check it out, and I'll see you on the next video. Just made some money.